I'm Mike Hall, currently the Executive Director of Three Rangers Foundation, and through our missions and programs, we are supporting the Ranger Regiment's Ranger for Life initiative by providing experience, guidance, and vetted resources to current and veteran Rangers and their families. We support the 75th Ranger Regiment's Ranger for Life programs by providing benchmark transition assistance to current and veteran Rangers. We maintain transition counselors at each Ranger Battalion, offering timely and personalized support in the Ranger Regiment's transition Big Five of mentorship and networking, education, financial wellness, VA benefits, and holistic fitness and wellness. Central to our approach is an extensive mentorship program, leveraging a network of former Rangers to enhance opportunities and ensure Rangers thrive in their post-military careers. These meaningful relationships allow both mentors and mentees to stay connected to the Ranger community and benefit from shared experiences and guidance. Transition is a lifelong event. Today, we're going to hear experiences and advice from Ranger Network mentor, Captain Retired Patrick Hanlon. Today, we're going to talk to him about his company called Home Buyers of Savannah. He also runs an organization called Ranger Investors, which is a nonprofit, and hopefully he'll touch on that in his introduction. But Patrick, great to catch up with you. Thanks for all you do giving back. Again, why don't we start off by you telling us a little bit about your military experience and your post-military background, and then we'll get into talking about Home Buyers of Savannah, but maybe also touch on Ranger Investors, another webinar that we did not too long ago, which I think which is related to this. So, Patrick, good to see you.
You too. Okay, so my military career started in 2011 when I enlisted. I enlisted my last semester at American University. I enlisted as a 35 Mike, which is a human intelligence collector. And then very quickly, I made my way over into SF land, became an 18 Echo, which is a SF Commo Sergeant. And then I commissioned through OCS, became an infantry officer, went over to the 82nd, and then made my way over to 1st Ranger Battalion, where I was for the last 4 years of my career in the Army until I was medically retired in May of this year after I had spinal surgery. As far as real estate investing goes, I started investing in 2017, right when I got back from an Afghanistan deployment. When I say I started investing, I bought a house. I didn't have the intention of investing. I just got sick of paying rent. Fast forward, I ended up buying a house pretty much every time I PCS. So I ended up with property outside Fort Liberty, outside Hunter, outside DC, and actually also outside Florida, or in Florida, outside my wife's based down there when she was in the Air Force. So like we racked up a pretty far-ranging portfolio, and it was all houses that we purchased when we moved that we used a primary home mortgage for so that we could get the best rates. And then when I was getting retired, I decided that real estate investing was going to be my next passion. And so I just dove headfirst into it. And kind of like simultaneously, we started Ranger Investors, which is a nonprofit. And then my wife and I and our business partner, Trey, we started Home Buyers of Savannah, which is a for-profit operation here in Savannah.
Yeah, well, they say, you can never lose money on real estate as long as you're smart about it. And, I'm an old man now. We're in our forever home. We live on a little 10-acre lake, on a reasonably sized house. The older you get, here's a lesson for everybody. Make sure your master bedroom is downstairs. You don't want to be climbing stairs your entire life. But, and we were able to pay cash. We were able to pay cash on our last home, and the reason is very similar to you. And Rangers have a distinct advantage. I mean, I spent 16 years down in Hunter, so bought our first house for $25,000, and then we reached the point we wanted to move into a better house, and so you really, for most of your career, you really don't have to move around. So we could sit on that house until we got the price we wanted, and then we moved into what we thought was a good deal, and ended up owning 4 different houses just around the Savannah area. And that's been the story of our life. And always making just a little bit more, and being able to be smart about it. And it's an advantage most people in the military don't have, because you got to move around every 3 or 4 years, and sometimes you're forced to sell, or you're forced to rent, and sometimes you don't have the opportunity to find a good deal because you got to move the family into something. So yeah, good deal. You touched on it a little bit, but why did you start the company? And one, you got to make money, but are there other reasons why you started it? Yeah.
Yeah. Well, yeah. Because if I could go back in time, I might have gone about it a little bit differently, because it turns out making money is a bit harder than I thought it was going to be. But um, I decided to start my own company. Well, one, I was encouraged to do so from my business partner, who was an infantry officer, and he's about 4 years ahead in his investing timeline. And I identified him as the guy that I wanted to be when I got out. So that kind of goes back to like a piece of advice I'll tell Rangers, is like, find the guy or the gal that you want to be in 5 years, seek them out, ask them questions, and really listen to what they say. So that's what I did. So I was talking to my friend Trey, and he had started off kind of like how a lot of us Rangers start off with real estate investing. It's just like accumulating houses when we move, and then maybe starting to buy more than one in our duty station area. Um, and he's like, well, hey, this is great, but like real estate investing is not going to generate the same cash income that you were earning as an officer in the Army, right? Because real estate investing is usually like a long-term play. And even, some of my stellar properties may only be cash flowing a couple $100 a month. You can't live off couple $100 a month. So we started Home Buyers of Savannah basically to be like a cash engine to replace my W-2 income, and to create cash so that I could buy more real estate. Now, that's not what happened. And that's why I would caution folks about thinking they're going to go the entrepreneurial route and be able to very quickly generate cash, because it's tough to have your cake and eat it too. One of the nice things about getting a W-2 job, or even like a 1099 job, and what I mean by that is, working for a company, or like a 1099 job, perhaps becoming like a real estate agent, or doing, some contracts or something. With that, the income is a lot steadier. Now your upside is capped, right? Because then generally you don't have any ownership, and that's one way that we can get like outsized returns. But on the flip side, you're getting a steady paycheck. And when you're transitioning out of the military, steady paycheck is pretty important. So I just want to like say that I went into it with one purpose, and it didn't fulfill that purpose. Now it has been great, and I've gotten a lot of other stuff out of it, but I would really caution anyone who thinks they're going to start their own business and then be able to pay themselves a good amount of money, because every entrepreneur runs into this dilemma where it's like, you want to feed your baby, but you want to feed yourself. And sometimes
Yeah.
you do have to pick, because you're just starting out and everything is harder, and success is not going to come as quickly as you would like it to.
But long term,
Absolutely.
yeah, okay. Yeah.
Yeah. So long term, um, it's been great. We just entered our second year of business, and now things are really starting to take off. But that first year was brutal. I ended up paying myself $7,000 in 12 months. That ain't much. Like, now, now it's crazy, because now in 2005, we have brought in more gross revenue in 1 month than we did in an entire year. But that didn't happen overnight. It took 12 months of just like grueling work to get to that point. And I don't think my experience is unique as far as entrepreneurs go. I think a lot of entrepreneurs, whatever type of business they're starting, the first few years are really lean and really tough. So you've got to go into it with some sort of like foundation and support network there, especially financially, because there's a good chance, you're not going to be able to pull much money out of it.
Yeah, I think, most rangers we talk to at the end of the day, I mean, their long-term goal is they want to own their own business or they want to work for themselves, something along those lines. I mean, it's the personality of guys and gals that serve at the Ranger Regiment. That's just their personality because we all know we're smarter than our boss, and sometimes he just don't listen to us. But so that's a goal of everybody, but most folks are smart enough to figure out, well, maybe I can't do that right now. I mean, uh, you have to bring in a certain amount of income. I mean, is this home buyers, is this something that's safe enough that I can go do something else and still spend the right amount of time, because my ultimate goal is this is what I'm going to do. So I mean, time is your most, just like in the army, I mean, time's your most important asset. Can you do both and be able to reach your goal, realizing it, at a certain point you don't want to work for the man anymore, but if you don't have the time to get into your lifelong dream, your home buyers in your case, I mean, does it work?
Yeah. So some rangers are able to, and this is like, if I could go back in time, and this is how I would recommend any aspiring entrepreneur do it who's in Ranger Regiment. Start to build the foundation on your way out and maximize that time. Because what you don't want to do is, like, on March 1st, I hand in my tan beret. On March 2nd, I start a company. It better start paying me. Like, that's not how I would do it. So
Yeah.
I really look up to Carlos Cordero, who was in Ranger Regiment, and then he moved over to 3160th, got out of there. Um, he started his real estate journey years in advance of getting out with his family, and like slowly built up his portfolio. And he got to the point where the like basically being in the army was now kind of like holding him back, because he had set up this business. It had proven itself over several years, and now it was time to go to the next level. And so he very much had something to look forward to, and he didn't have to prove a business concept when he was getting out, which is a very, very risky thing to do. And there's a numerous other guys who have done the same thing. They sort of like, it's okay if you start a business and it only brings in $100 a month, but you can still prove the concept, during your CSP or on your way out, or like, on your free time. Those are things that you can do. Can you take your business to that next level while you're on active duty? No, you can't. And I don't think you should have that expectation. It also wouldn't be fair to the guys that you're serving with, because to take it to that next level, you've got to put in the same amount of time that you put into being a good ranger. But what you can do is like start to test the waters. There's a really good book called Pivot that I read on a deployment that talked about that. And it had some very good like tactical advice of how to pivot from one career to a very different career. And the way you do it is not like on, like the basketball court, which is like a hard pivot. It's something that's much more gradual, like a very like slow boil is the way that I would go about doing it. And the nice thing about doing that too, and like I would think I did this, is like you bring your leadership in on it too, and you say, hey, leadership, I intend to get out of the Ranger Regiment, and this is what I intend to do when I get there. And I'm not going to be out for this amount of time. I plan on doing a CSP down the road in like this field to help me get there. And you start like sort of socialize that idea with other people so that you can gradually do it, because there's nothing worse than trying to like start a business like under the table without your leadership doing it. Whereas like I was very upfront about it and had no issues really. I can't think of one negative thing to say about my leadership or the way that they like supported me on my transition out. And
Yeah.
you know, when you're in uniform, you're in uniform. Like that's your priority. So
Now that we've crushed all these dreams about people starting their own business, uh, yeah, but it can be done. It's just, I mean, I think everybody's smart enough to realize unless you're born with a silver spoon in your mouth, you're gonna have to realize that you have, short-term goals, midterm goals, and long-term goals, and hopefully you plan your life out like that. It never ends up the way you plan it, but at least you have a path that you can do branches and sequels off of anyways. But that being said, I mean, we just told everybody this was hard, but how does Home Buyers of Savannah make money?
yeah, right. Well, I can tell you how it didn't in its first year. So what we do is pretty niche. We purchase real estate off market with cash, usually distressed real estate, and then we reposition that real estate on the open market and we sell it to retail buyers. So we sort of provide service on two ends. Like we take real estate that, when I say distress, like it could be a burned down home, it could have a tree through its living room, it could have an owner that's incarcerated, it could have a deceased owner, what have you. It's underutilized real estate. So we'll buy it with cash. And it usually has so many problems that you couldn't sell it on market if you tried. And a normal buyer couldn't even get financing to buy it. Like your standard mortgage lender is not going to lend you money to purchase a house that has a tree that just fell through it. They want something way less risky. So we buy that stuff. We will do some work to it, and then we will sell it on the open market, and we will sell it to like a retail buyer. So like in the real estate ecosystem, what we're doing is we're taking these like tough, distressed pieces of real estate. We're buying them, we're doing some work, and then we're putting them on the open market so that you can interact with Home Buyers of Savannah in two different ways. You could buy a house from us on the open market, or you could be selling a distressed piece of real estate to us. And this sort of like function that we provide in the real estate ecosystem is very niche, which is not a bad thing because I've heard it a million times from entrepreneurs, successful ones, but they often say like find a niche, double down on it, and do it better than nobody else. The challenge with starting a business in an area where there's a lot of competition is just that there's a lot of competition. Whereas if you go into an area that's like really hard and no one else wants to do it, well, that's usually where you can make some really good money. And that's where like your niche businesses can really make good money. Like, I'm just trying to think of like other niche stuff in real estate, like septic tank removal could be one, or like putting on roofs in the South in the summer. Who wants to do that? Those guys make a lot of money doing
Yeah.
it because it's tough and it's like a niche. So when you go into business, and you're competing against so many different entities, it's really hard for you to kind of like find your way and distinguish yourself. It's tempting because you'll see all these other businesses making it seem easy, but it's really not. In any sort of like crowded market space, it's really tough to compete when you're just like starting out. I mean, imagine if you wanted to start a new energy drink. Brutally difficult, very crowded.
Yeah, it's interesting, and we've been doing this Ranger for Life program long enough now that you can see some kind of trends. And I saw this growing up too, but people, as guys get out of the military, say, I want to do this, and this isn't, obviously I'm not an expert, but I use the example of tech. 3 years ago, they couldn't find enough tech people. Schools couldn't produce them. They couldn't get enough certifications. Everybody was hired. They were making good money. And then it was a year ago, 18 months ago, all the big companies did this 10% cut, basically in tech people. So we still had Rangers going, I want to get into tech. And I go, well, we can help you do that because, opportunities come through networking. So there's always jobs, but, it's not like, If you think you're going to go in there and sign your own contract, that's not happening today. That happened. Well, that's what I'm reading. Well, that bubble, it's like the infamous .com bubble for people that are old enough to remember that. Or when I was growing up, everybody wanted to be a computer scientist, but you got behind the power curve. So how did you determine this was going to be your niche, or did
Good question. I can answer that. Yeah.
real estate is, and real estate, well, I'm in my forever house. I have no idea what the mortgage rates are. I read about stuff. I have no idea if that's good or bad, or, I mean, how do you figure that out?
Well, I'd like to say it was part of some grand scheme, but it started with I got sick of renting and then I started buying real estate. And then I started to, it becomes very clear once you buy real estate and you start seeing your equity in a property go up, like the wealth generation is very obvious to you. And then when you can figure out how to have someone else pay down that financing and increase your equity, and then it becomes like even more obvious. And the cool thing about real estate is that the US government incentivizes and subsidizes real estate investing. It doesn't do that with stocks. Like if I want to go buy Palantir stock where some Rangers work, the US government is not going to loan me $350,000 at a 6% interest rate and say, you don't have to put any money down and you can pay this back over 30 years. Oh, and there's protections too. Like if you miss a couple payments, like we're not going to take it back right away. But that is not how it works. But in real estate, that is how it works. There are these,
Oh,
the government will give you a loan at a very attractive interest rate with very attractive terms, and you can go buy a really, really expensive asset. And I don't know any other asset class where you can do that. So that's one thing. Two, I like real estate because if we just look at the basic principles of investing, and supply and demand, we want to find areas of investment that have too much demand and they're undersupplied. Real estate is one of those areas. Uh, you could go ask most real estate experts, and they're going to tell you right now in the United States there is a residential housing shortage. I've heard as low as 1.5 million, and I've heard as high as like 7 million homes. The thing with homes is they're not built overnight. They're very hard to build. So that that dearth of supply is going to remain for a bit. It is not like some other stuff like oil. There is no strategic reserve of houses in the United States for people. Like they can't flood the market with it. It's just things in real estate, they don't happen that quickly. The market actually moves like pretty slowly. You won't see this type of aggressive swings in real estate that you'll see with stocks. I mean, not even close. Like a 5% price drop in housing is going to make the front page of the Wall Street Journal. Whereas, like, I mean, Nvidia was what, up 10% in a day. And it's just like, yeah, that's just what Nvidia does. Like it hardly moves the needle. So that's another reason why I really like real estate investing from that like risk side of the house. I also like real estate because it's difficult to lose all your money. So if you buy some stock or some bonds or whatnot, there is the risk that you lose all of your money, that company goes under and it becomes absolutely worthless. That house that you bought in Savannah, like if it burned down, it's actually still going to be valuable. Like I would probably come knocking on your door and try and buy it because even a house that has burned down still has value. That land has value, and it's it's always pretty much going to have value. So I also really like real estate that way because the bottom the bottom side is like it is capped to a certain extent. And even if like a catastrophic incident were to happen on your property, it's very difficult for it to lose all of its value. Like if a tree did come through the roof, well, okay, it may have reduced the value by 25%, but there was a neighbor had a tree come through their house, and they still ended up selling it for over $200,000. So like that's not bad. But you could have Lehman Brothers stock or something, and that could bottom out all the way, and then you could lose all of it. So that's also another reason why I like real estate. And then there's all of the tax advantages too that you don't get with other investments. Like um, being able to, for example, with your investment properties, being able to avoid capital gains tax. There's a couple of different ways to do it. Depreciation is great. Like I don't get depreciation benefits with the stocks that I own, whereas with real estate you do. So and that's all because the government wrote the tax code. The government incentivizes Americans to own property. It is part of like the American dream, and
Yeah.
they're trying to make it accessible. So you might as well take advantage of it. That's my opinion.
Yeah. Yeah, I think it's always been that way. I mean, when they wrote the Constitution or the it was it's written now as, the pursuit of happiness, but the original wording was pursuit of property, or
Yeah,
along those lines. It was about owning property.
right.
Interesting if you go way back. Well, I mean, you think it's a lot of work. So is it? I mean, is it you and the wife? I mean, what's the team look like? Is it you and the wife? Do you hire people? Are you have people on retainer? I mean, who are all these people that help you? I mean, you need a lot of advice with taxes and insurance and
Oh
CPA.
yeah. Oh, for
What's
sure.
the team look like, or what should it look like?
Yeah, I think I probably pay more people. Yeah, I definitely have more people that I pay than I do of people's houses I buy. That's for sure. So the team at Home Buyers of Savannah, my wife and I stood it up. And then we've also got a business partner who provided some of the capital. That's Charles Chandler, who I mentioned him before. He's an investor, former infantry officer. Um, so in the beginning, it was the three of us, with really my wife and I doing most of the work. And then as we started to grow, uh, we brought in some interns, so some like high school students, and then we brought in everyone that we've brought in has some sort of like military connection, which is really cool. So like our last intern, Victor, is not our intern because he's now at basic training. So like I think being around, like he just really absorbed it. And we're like, hey, real estate investing can wait, like go serve your country. But and then we brought on we've had like a recurring I'll call it like a CSP billet, which is like an operations role. Um, we just had Daniel out of 275 doing it. Now we've got James from 175 who's doing it. And then we've got Alex Rodino, who is our sales director. He is in the process of exiting. He's an infantry officer too. So we're heavily reliant on like military members that are transitioning out. I do that because one, it's like a smart business decision. It's also because I can like trust those people. And so like when you're starting a business, like you really put a premium on trust. Um, that's like the core. And then outside of the core, we have all these people that we pay. And in a larger organization, these people would probably work under the roof of Home Buyers of Savannah. But with a small business, I don't have enough revenue to have a full-time attorney and a full-time CPA. So the outer network, we've got a closing attorney, we've got a full service law firm, we've got a CPA, we've got a social media advisor, Chance Yeager, who's he's on his way out. He's a ranger. We've got Rocket Social, which built our website and they do our search engine optimization. We've got Vets, which is Veterans Easy Trash Service, which is a veteran-owned franchise that hauls away junk from the properties that we buy. They're awesome. We partner with Trophy Point Realty, which is started by a couple of West Pointers. They help us like disposition our properties. We work with Berkshire Hathaway. They help us do the same. Like gosh, it just goes on. Urban Gate Capital, they help us with some lending. And then I have a network of investors who provide Home Buyers of Savannah with the capital to purchase these distressed assets. And I would say like close to half of our investors are veterans, which is cool. And then like probably half of those come from the like Ranger community. So I would not be successful as an entrepreneur without my military connections, and especially the Ranger connections and the connections that I have in Savannah. That stuff is just like indispensable. It's yeah, it's hard to say like how much those partners have helped, and it goes both ways. I'm paying these people, don't no one's doing this out of the kindness of their heart, but
Yeah.
that's it's cool. It's cool to be able to be a veteran owned business and be able to pass off some of your business to other veteran owned businesses. Another one comes to mind, Keith at Pride Home Inspectors. Awesome dude, combat veteran. And he does like all of our inspections. So we kind of like we've built this network. I think it's like our not so secret sauce is that we really rely heavily on other veteran owned businesses.
One of the basic principles of any business for longevity is diversification, however you want to define that. But when I talk to you, the first thing that comes to mind is you're buying some old junky houses, out on Tybee Island that that are 200 years old and falling apart. But I mean, how do you look at diversification? Are you do just residential, commercial, Airbnbs? I mean, what's the gamut of how you protect yourself from those valleys that
Sure.
that that,
Yeah.
that come that immediately follow a peak.
Yeah, definitely. Well, as an investor, I start with diversification at between like diversification between real estate, stocks and bonds. And you can kind of like break some of that up into like mutual funds and ETFs. But despite the fact that I'm like a real estate fanatic, I am not 100% invested in real estate. So like I'm hedging myself so that if real estate went under, then I've still got my other investments. And I tell that to my investors too, like don't invest in our real estate or with us in real estate as your one and only. This is going to be what gets you on the beach. Like this should complement the other things. And I'm not going to. It's not even. It doesn't even really make much sense to compare real estate to some other investments because what they should do is they should both be in a diversified portfolio. So that's where I start. Now, Home Buyers of Savannah and my own personal property, I do several different types of rentals. So we do short term, long term, and executive. Both of those come with their own risks. The short term rentals tend to produce the most income. However, short term rentals are they're much more vulnerable to like changes in regulation. I mean, New York just banned Airbnbs in some capacity.
Hmm.
Big deal. So, and some other like municipalities will do that too. On Tybee Island, it was once a free for all, but now they're starting to cap them. So, one way you can hedge against that is by not only having short term rentals, by having long term rentals. Long term rentals can also come with their own risk as well because long-term rentals are very binary. You either have someone in the unit or you don't have someone in the unit. So in that way, the short-term stuff can actually hedge against that because short-term, one bad guest, okay, they're in there for a couple days. Long-term, if you have a bad tenant, that could spoil your earnings for like quite a while. So those are the ways that I hedge the different or I diversify the different types of rentals that I personally have. Um, Now, to hedge against that, what you can also do is invest in other folks' real estate operations. So you can invest in real estate syndications that are in other asset classes or in other areas. So there are some real estate syndicators who focus on like multi-unit, which I personally don't have much experience in. So I can diversify my portfolio, not by going into that asset class myself as an operator, but investing in other operators. That's what a lot of really smart real estate investors will do. They'll own their niche, but they're not going to put all their eggs in one basket. So like while they might be, let's just say they're hotel guys and they're really good at running hotels. Well, they diversify by also investing in farmland. I mean, that's just like an example I pulled out of thin air, but it's a pretty good example. Like uh Brad McGay, friend of mine, also Ranger Investors. He's in the commercial real estate scene in Philadelphia. One of the ways that he diversifies is partnering with me on residential real estate projects in Savannah, where he's not an operator. He's just a passive investor. He hands his money over. But let's say, Philadelphia got hit with an earthquake tomorrow. Well, he's also invested like in this other market. So two ways to diversify are with different asset classes. And then within the asset classes through asset types, and then also through like the geographical markets. The challenge with being diversified and doing all the work yourself is that you become overstretched, which I ran into that problem with my personal portfolio, and what is a challenge that a lot of rangers run into. Because let's say they let's take like a ranger infantry officer, because they're moving around like crazy and they may have picked up houses in 10 different states or 5 different states. That can be really challenging to manage, because when you have a couple properties in one location, you can have one property manager. But if you have properties in 5 different states, that's 5 different property managers, that's 5 different lenders, that's 5 different. I mean, it's crazy. Whereas if you're focused on one single area, then you get more bang out of your buck, and you get more. Like if I were to add more short-term rentals to my portfolio, I would do so in Savannah so that Carlos Cordero, former Ranger, could manage them, because he already manages some of mine. He does a really good job. I don't want to build another relationship with another property manager that does short term in another market, because that takes a ton of time. So what I can do is I could find people in those markets and just invest in them or invest in their businesses. And that's kind of like how I would recommend diversifying, not like, oh, I want to diversify, so I'm going to go buy a house in North Dakota. Like,
Okay.
tough to manage.
It's amazing the things you learn in the military that apply to life. We've sort of talked over best case scenario, most likely scenario, but what guys also need to hear, and again, the strength of the Ranger Mentor Network is we tell you the good, the bad, the ugly, and this is what you got to watch out for. So, worst case scenario, it doesn't work. You pick the wrong niche. It's not sustainable. You may not lose everything, but you're going to lose your business, and you got to start over. I mean, how do you prepare for that, and what could happen? You declare for bankruptcy or whatever. What How do you protect yourself from that worst case scenario? And if everything else does fail and you do fall into that, what are the long term ramifications? Is that something you can maybe recover from?
Yeah, so that's like where the most dangerous enemy course of action
Yeah.
comes into play, which you should absolutely do. That's something that I've noticed real estate investors who don't have a military background tend to overlook. Um, but something that like special operators are like really good at, right? Because uh a lot of real estate investors I noticed they just celebrate their victories, and they just pick apart their victories, and they try and conceal those losses. Whereas like in Ranger Regiment, like a good AAR is one where we like are ruthless and we pick it apart and we hone in on all the things that went wrong. Like I've learned the most when I was a platoon leader, and our commander, Colonel Brawley, would talk about missions that went poorly. I know everyone's ears perk up, right? Because it's like, okay, now we're being forthright, we're going to learn things that are going to save us. Like that's where the real true lessons are learned. And I think the same thing in real estate. So what you should do going into it, like if you're starting your own business, is uh, learn about how others failed, like see where exactly they went wrong. The honest truth is that some people failed because of their own inadequacies, but some people fail because of circumstances that are totally beyond their control. And that's where like market distress can come into play. And it's they just did absolutely nothing wrong. I mean, that's what's like tough about the world outside of Ranger Regiment. Like, you know, the selection programs that we go through as special operators are so like tightly controlled, and all the variables are so controlled. Like the most I think the greatest variation is like, okay, were you a winter ranger or were you like a summer ranger, right? But in real estate, it was like, hey, are you a 2009 guy? Because at that point, like, or were you a 2007 guy? Like, were you the guy who paid 300K for that home? Or were you the guy who came in after him, who could have been just as proficient, but because you came later, you were able to get it at half the price because that guy lost everything.
Yeah.
That's like the kind of stuff. And so you should really study that guy who lost everything, and then like you should have a game plan. And that's where this is where the LLC becomes very important. This is where if you're going to start your own business, like the LLC is a must, and making sure that that LLC, that you're running the business through the LLC, and that you're not commingling funds, so that if you have to, if you got to put the dog down, you put the dog down without hurting yourself. But unfortunately, like a lot of it's just it's so hard to actually do in practice. We see a lot of rangers who like try and go get funding, but nobody wants to lend money to an entity that has no experience or no background. They want some sort of like personal guarantee. So in that case, it's like never take on money that you don't have, that you could not pay back, and don't ever invest in anything that like don't put up an investment that you couldn't lose. That should be your first criteria. Like if I'm going to go invest in this, I tell this to my investors, like if you're going to invest in me, like you need to be able to never see this money ever again. If this money is earmarked for something else, then it's not an investment. It's already vouched for. That's a very key, it's a very key thing. And then you start to see, and I have some investors who have invested like very small amounts of money with me, but that's good because that's what, if we look at their income and their net worth, like they can afford to live without it. So it's not always so much like what the actual like total number of the losses is. It's really like a percentage of like what you've got going into it. And a safe estimate is like you should never have more than 5% of your net worth invested in anything, because if it goes if it goes belly up, like, okay, I just dropped 5%, I lost 5% of my net worth, like not the end of the world, versus like I've got everything tied up in this business goes under, and now I've got absolutely nothing. And sometimes like you've in your family, you've got to put like one person might have to like really double down on the business, but it would be wise to have the other person kind of like hedge against it. And I think like a winning combination is for like a married couple, one spouse has a W-2, consistent income, and that family can and is comfortable living if that person is the only one who's the breadwinner, and then the other person is able to take those risks. If you go into like your entrepreneurial route and it hinges on the entrepreneur bringing in all of the money, and we got into this scenario for a little bit, the entrepreneur is like at risk of making very bad decisions because they start to get super desperate. It's really it's no different than what you'd see on like any patrol or operation. Like hard, like you want those hard decisions to be made beforehand, and you don't want to be scrambling when it comes time. Like, and my wife and I did this too, like God, I'm such a brainwashed ranger, but whatever. Like I have abort criteria, and it's decided beforehand so that if we get to that point, my wife and I are not arguing, or my business partner and I are not arguing over whether or not we should cut sling load. Like we already decided. It's just like a commander when they're coming up with their abort criteria. Like when that trigger happens, it happens. Like we don't want to be in the moment thinking, do we keep pushing or not? Like you should go into it like, what is your abort criteria? At what point are you going to like cut sling load? What is the amount of money that you're like willing to lose? What is the amount of pain that you're supposed to take on? And it is really so similar to like the mission planning that we do. Like what is like the critical force that we need? And when this is where the discipline comes in, like when those triggers are met, you have to have the discipline to pull back. And when you don't, that is where problems start to compound. When you start falling for like the sunk cost fallacy and you start like doubling down on things when you really should say like, nope, like we didn't make enough money doing this. And we decided if we didn't hit this threshold, we weren't going to continue doing this particular thing. So we now need to stop. It's having the discipline to do that is tough.
Yeah, really great discussion. It's similar to, guys want to get out and start their own business, become entrepreneurs, and same thing with guys. I want to be a 1099 contract. I mean, both of them can be very, uh, very economically fruitful, but
They
but
can.
but if you don't have a backup plan and that's your only plan when that contract ends, or the market bottoms out, or someone better than you moves into your niche, you've got to have, I mean, that 5% rule is very good. And uh, yeah, I think every business school you go to, that's the first thing the professor will tell you, and then everybody forgets it after that. But it is.
Yeah.
Yeah, a lot of the names you mentioned, obviously, a lot of them have been through the Ranger for Life program. A lot of enlisted guys, some 4-year guys, some retired guys. But uh, are there anything that guys should take advantage of in the Army? Any school, any certifications? I know on the Ranger Investor site, I think there's some books you should read and those kind of things. But is there anything a guy should do? I mean, we all think most people think they know when to get out of the Army. None of us really know the answer to that. I mean, I joined the Army for 4 years, got out 34 years later. But what is there anything that someone should do to prepare to become a real estate investor, or an entrepreneur overall? Does it take a college degree? Do you need an MBA or a BA, or do you just, or can you just, a lot of the Army offers a lot of things that most of us don't realize it offers until we get out. Is there anything you can think of that guys should think that they should do while they're in the service, take advantage of while they're in the service?
Yeah, I would, whatever avenues you're exploring, I would dip your toes in. So I was entertaining the idea of getting an MBA. So SOCOM has this awesome program where you can take MBA courses at Ivy League schools for free. And I took one on value investing, and I was humbled very quickly. And I was like, wow, I am unprepared to get an MBA. And I was also like, I don't think I would like getting an MBA because I just don't know if I have the patience for like academia right now. I am so glad I did that rather than show up to an MBA course the first day while I've already like moved my family and I'm ready to go. And then it's like, oh my gosh, like I might have not made the best decision. So I would say like dip your toes in. Um, so if you're thinking about like going down like a certain route or starting a certain type of company, try and find a similar company and start working for them, even if it's like Saturdays. Like if you want to become a let's just say you want to invest in big multi-unit construction projects, which down here in Pooler, there's tons of them. You can't throw a rock without hitting a new one being built. So go find one, maybe one that's owned by a veteran, and say, hey, I'm active duty right now, but would you mind if like on the weekends or on some of my days off, like I came and intern, and then you can actually see what these guys are doing? Because gosh, like just peek behind the curtain first before, dip your toes in the water before you like jump in. Because you could otherwise be in for like a pretty rude and upsetting awakening. And I have not seen guys in Ranger Regiment do it, but I have seen other veterans do it. They convince myself of the glory of something. And then when they actually start seeing the nitty gritty, it's like, holy cow. It's like being a ranger. Like everyone wants to be a ranger until 10 minutes into ranger school, right? Like most of them are gone because it's like, hey, this is actually what it's really like, right? Like
Yeah.
it's actually, this is you should get a good glimpse of what the grind looks like. And if you think you're up for it, then you're good. Like don't just focus on like the glamour of it.
Yeah, great advice. And of course, that's part of what the Ranger for Life mentorship program. It's really two parts. I mean, the first part is we want you to reach out and talk to people that have done what you're considering to do. And if you talk to a fellow ranger, you're going to get the good, bad, and the ugly of that. And that can lead to lots of opportunities. But the first part of getting out is figuring out what you want to do. And most of us don't do that. But there's a network out there that's certainly willing to help you and spend as much time as you want to learn, the good, the bad, and the ugly of what you want to do. And then after that, of course, they'll set you up with their networks to make sure you're successful. I don't want this to go on much longer. Obviously, it could go. Personally, interests me, and I could go on much longer. But any last comments before we close this out?
I don't think so. I'm trying to look at the advice that I usually give. I try and like narrow it down. Yeah, we've talked about like find someone who's 5 years ahead of you, where you want to be, talk to them. And I think that applies to like every industry. And then I've talked about before using like the rule of three. So try to get like three expert opinions on something before you make a decision. Um, and then the other thing, this applies to real estate investing. So there are some problems you can fix and there are some problems you can't fix. Uh, Two things you can't ever fix with real estate investing is cost basis and time. So you can never go back in time and change the price that you bought something for, and you can never make time go faster or go backwards. So when people say like, hey, what's the best time to invest? Like the best time to invest in real estate was yesterday because yesterday was came before today. And so time always works to our advantage, usually works to our advantage in real estate investing. Um, but that being said, the flip side is like, don't just buy something because you don't want to wait and because you're impatient. Because if you buy something for the wrong price, you can never go back and fix that. If you do buy something and then you discover it has like an issue with it, like a physical issue, of course you could address that. If it's got some code issues, yeah, it might take you 8 months, but there are ways to fix stuff like that. But if you overpay for an asset, that is like the number one determinant in how successful your investment's going to be. So that once I realize that, and I spend most of my time getting things at the right cost basis because other problems we can address. And if you get something at a good cost basis, it gives you a buffer to make mistakes later down the road. It is so similar to like mission planning in Ranger Regiment, where you're like setting the conditions for a good infill. Like if you go in with a good infill route and your guys are well rested and they're well fed and they've rehearsed, well, we're probably going to be able to like make up for some mistakes that we might make, right? But if you go in and the guys are already exhausted, um, and the plan is weak and all these other things, it's like, well, then it becomes really hard to like start troubleshooting. And real estate's the same way. So if you get something at a good cost basis, then you can kind of like absorb those punches later on. But if you don't, and your plan relies on you like making a certain amount of money to make up for that cost basis, that's where you run into issues. And when rangers will ask me like, hey, should I buy this property? Um, and if I just throw a couple contingencies at them and the plan falls apart, it's like, okay, like move on. Like we do not compromise on that. Like find a property that you get at such a good cost basis so that when these contingencies arrive, you've got some like standoff and you're going to be all right.
Sounds like tactical patience. So
Sure. Absolutely. Right. Like it's so similar to like ranger mission planning. And
yeah.
we don't go out unless we have stacked the deck. And like I won't buy a house unless I have stacked a deck. And there are so many different layers of risk mitigation that like, when ranger shows up on an objective, like the enemy doesn't stand a chance because we have stacked the deck. You should never go into a real estate investing or opportunity without the deck just totally stacked in your favor.
Well, thanks for your time and thanks for all you do have done, giving back. The best way to contact you, I guess, is maybe through the Ranger Investors Group or.
Yeah, that, or you can go to homebuyers of We've also got form fills on there. You can also find me on LinkedIn, Instagram, Facebook. I shouldn't be too hard to find.
Yeah. All right. Well, again, thanks for your time today, and again for all you've done for so many folks. A couple key takeaways is network, network, network. Find people you can trust. The things that you learned in the military about planning and contingency planning are still critical out there. And most people, once they get out of the Army, they have somewhere between 80 and 50 and 80% of their work life in front of them, and don't forget that, and don't just think about the next year. But yeah, thanks again. Always good to see you. Always good to talk to you, and best to you and your family. Thank you very much.
Likewise. Thanks, Mike.
Thanks.